Transport Corporation of India, a good stock to pick with shipment goods back in the highway lane. 2020 was a difficult year for the global economy and shipment of goods and services with all the disruptions caused by the coronavirus pandemic. But despite the widespread disruption, multimodal logistics service provider Transport Corporation of India ended the year 2020 on a positive note, with December quarter earnings showing a strong recovery on a year-on-year basis. The one-man, one-truck, one-office company's strong execution and its focus on technology continues to drive its outperformance relative to expectations. The company has experienced a steady run-up in the price of its shares since bottoming with the stock market last March. The valuations of 12 times FY22 estimated earnings are reasonable. Now let's talk about quarterly performance. Transport Corporation of India's sales rose 14% year-on-year to Rs 807 crores, while the December quarter earnings rose by a whopping 25%. Earnings before its EBITDA grew 23% to 80 crore rupees from 65 crore rupees on a year-on-year basis, riding on an improved market conditions and cost efficiencies. Freight segment reported mild positive growth as the volumes were driven by pent-up demand and inventory restocking during the festive season. Margin improvement was attributed to better cost management and increase in share of less than truckload business. Sharp recovery in the automobile volumes drove 23% revenue growth in the supply chain solutions segment. Healthy demand from non-auto verticals, that is FMCG and e-commerce, gave a fillip to capacity utilization and lifted the margin profile for the SCS segment. Seaways business recovered to pre-COVID levels, but the top line and margins were adversely impacted by dry docking of shipping vessels. Despite the disruption and the headwinds, the company possesses a robust balance sheet. The capital expenditure for the full year, that is FY21, is pegged at 150 crore rupees. The investments will be funded through a combination of debt and internal accruals. As of December 2020, the company had a debt-equity ratio of 0.3x. Now let's talk about future outlook. A big rebound in operations is projected for 2021 following a recovery from COVID-19 pandemic disruptions. Reopening of economy coupled with the vaccination drive should translate into better traffic in the months ahead. But in spite of the recovery, estimates put profit after tax at 8 crore rupees, less than the previous year, with the revenues also seeing a marginal dip by 68 crore rupees. The profit earning ratio has been projected at 14x. With the economy moving towards normalcy, most economic indicators had been improving in the last few months. While the manufacturing sector has bounced back, the revival in the construction activities and higher government spending augurs well for the logistics sector. The demand drivers for logistics definitely appear encouraging, but the spike in the crude oil could weigh in on the near-term profitability and margins of Transport Corporation of India. For FY22 projected estimates, both profit after tax and EBITDA margins will rise to 5.3 and 9.8%, while the profit earnings ratio will be at 12 times. The valuation, therefore, is reasonable and investors should look forward to accumulating the stock as the company is proxy play for domestic consumption.